Hello and good morning, ladies and gentlemen. You're with Martin Benef, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European Session Market Outlook. As usual, starting with North American markets coverage. Yesterday, good movements on the indices in America. The Dow 125 points range ended the session with 60 points decline. The Nasdaq 300 points lower. Technically, the chart suggests probable continuation of the downtrend for the next few trading sessions. Have that in mind. Yesterday, the dollar index, the DXY, was just a little bit changed to the negative. U.S. initial jobless claims at 259,000 versus 264 forecasted. Also, crude oil inventories down 14.5 million barrels. The Canadian building permits up 0.8% versus 3.2 forecast. Downbeat Canadian data yesterday. Economic reports from Canada printed weaker than expected results, which probably explains why the loonie was barely able to benefit from the large drop in the U.S. Crude oil inventories. The Canadian building permits posted a meager 0.8% uptick in July, much weaker than the estimated 3.5% gain. Capacity utilization was also weaker than expected at 80% versus the projected 81.5 figure and the earlier 81.4 reading. On a less downbeat note, the NHPI posted a higher than expected 0.4% increase in the house prices, underscoring the Bank of Canada's view that property market risks could be elevated. Unemployment rate today, net change in employment's participation rate and housing starts all due in the North American session. Moving to the European markets, yesterday the German DAX 30 did over 200 points range, ended the session with 100 points lower. The CAC 40 did almost 100 points range, ended the session with 8 points lower. Both indexes are currently at major support level. Take a look at the technical charting. Draghi reiterated no stimulus necessary for the time being. The ECB will continue to monitor markets. It has full mandate to resign the quantitative easing. The ECB upgraded 2016 GDP forecast from 1.6 to 1.7%. Inflation estimate unchanged at 0.2%. The ECB monetary policy decision decided to maintain its current monetary policy. Not only that, its official press statement was a word-for-word reproduction of its July statement. No change whatsoever, basically. If you can't recall the previous ECB statement and you are too busy to click the links, then just know that the ECB continues to expect the key ECB interest rate to remain as it is at present, and also, of course, lower levels for extended period of time and well past the horizon of net asset purchases. The ECB also said yet again that the monthly asset purchases of 80 billion are intended to run until the end of March next year, 2017, or beyond, of course, if necessary. And in any case, until it sees a sustained adjustment in the path of inflation consistent with its inflation aim, the inflation targets. Governor Draghi's press conference, instead of doling out additional easing measures as many had expected, he said that he doesn't see any need for more stimulus for the time being, adding that they continue to expect moderate, steady growth. Basically, the ECB's updated growth and inflation forecast confirmed this, as policymakers even upgraded the gross domestic product forecast, as I said, for this year from 1.6 to 1.7%, while maintaining their growth estimates for the next couple of years. Policymakers kept their inflation estimate on hold at 0.2% for the year. In response to one of the questions from the press, Mr. Draghi reiterated there should be no doubts about their will or capacity to act, and that they have the full mandate to resign. Quantitative easing question was, but for now, The ECB will continue to monitor the markets. Upcoming events for today, the German export imports and current accounts, trade balances as well. I think they already came out in red. British pound consumer inflation expectations, a major report, and also trade balance reports for the UK, and also the unemployment rate in Switzerland are due today. Moving to the Asian Pacific markets, yesterday the Nikkei 225 was just merely down 12 points, 142 down already today. Japan's tertiary industry activity at 0.3 versus 0.4% expected and 0.7 previous. New Zealand electronic card retail sales year on year 2.1% weaker than previous 3.7. Home loans for the Aussie 2.7 weaker than 5.9. And investment lending for homes for July 2.8% weaker than previous at 0.5%. Chinese PPI year on year 0.1% better than expected. CPI 0.4% weaker than expected and previous. CPI month on month 0.2% weaker than expected and previous as well. Yesterday, Governor Kuroda was on the wires via Reuters, let's say, addressing the press conference following his meeting with the Japanese Prime Minister, Mr. Shinzo Abe. The key headlines from that was they discussed domestic economy, overseas developments, and the Bank of Japan's upcoming comprehensive review. Didn't discuss the buying foreign bonds with Mr. Abe. No special instructions from him. Mr. Abe didn't say anything particular on monetary policy. Today's meeting with Abe was part of his regular meetings with the Prime Minister. The Japanese yen stacked a solid comeback against its American counterpart on Friday in the Asian session after risk-off moods gripped the markets on reports that North Korea conducted nuclear tests. While the Bank of Japan Governor Kuroda's remarks following his meeting with Japan's Prime Minister, Mr. Abe, had little impact on the Japanese currency. In the day ahead, all eyes will remain on North Korea nuclear tests-related news flow, which might influence the yen flows ahead of the Fed's speak, which is due later in the North American session. For the commodities market, yesterday the S&P 500 index had a range of 13 points, down to 2,175. Yesterday we had EIA natural gas storage change. The storage in the US rose by 36 billion British thermal units in the weekend at September 2nd, below the expectations of an increase of 43 billion. Crude Oil Stocks Change inventories fell by 14.51 million barrels in the weekend at September 2nd. Gold prices yesterday struggled for direction in North American trade as investors digested the latest US data as well as comments from the European Central Bank President, Mr. Draghi. Gold had a range of $14 yesterday, down to 1,337. Silver had also a range of 40 cents at 19.58 at the current time. Oil prices extended gains in North American hours yesterday, rising to the strongest levels of the session after the data showed that crude supplies in the US fell the most since April 1985. WTI had a range of $2 yesterday, up to 47.20. US natural gas futures extended gains yesterday after the data showed that the natural gas supplies and storage in the US rose less than forecasted last week. The natural gas is trading at 2.80 at the current moment. The range yesterday was 12 cents. That was pretty much all from me for today. Thank you very much for your attention. I wish you a successful trading day. Cheers. Bye-bye.